Jake Unfiltered is going to talk about AT&T today. All right, so I was looking up some articles and I noticed that there are several positive catalysts for AT&T, the stock. And the positive catalyst, all right, one of them is they're saying it's been oversold, right? So everybody that is holding is going to stay holding. I don't think the people that are holding the company are going to sell out because everybody's using it as a dividend stock. Now, back in the day, in May, around May, they announced that they're cutting dividends. I thought that they might be cutting all of them, but they only cut it like barely any, but it's still at 8%, and I haven't seen a dividend cut yet. Um, Now, if they when they do decide to cut it, I don't know if they're gonna like tank or whatever, but I think they already priced that into the company, and it's already like one of the biggest dividend yields, one like you can get through a stock, and 8.7 is huge. Okay, now if it drops down to like 6%, I still think that's a really good dividend yield for a company, and I think that this stock is going to be strong. I think that it's pretty much oversold now, and I think it's only going to go up from here. Um, the stock has a median price target of $29. This would imply 22% upside from potential from current levels. So from the stock price right now, it could go back up to $29 a share. So that's one catalyst, right? It's been oversold. And then, so now they are cutting their 3G. Okay, so my mom, she has Cricket, which is under AT&T, and apparently her phone quit working because they cut off 3G, and now she has to go buy a 5G phone, which I think is kind of screwed up, and it kind of made me mad because I want to be able to use my old phone. I got a Samsung Galaxy S8. I haven't really been wanting to upgrade my phone yet, but for some reason my phone still works, and I'm under AT&T as well. I think that they're a good company, and I think they're going to succeed in the 5G space. Now they do have good earnings. They have good they have good revenue and net income. So their revenue was 40 billion, their net income was 5 billion. So they made 5 billion dollars. They have a lot of free cash flow. Now every quarter they were positive in income, right? So Q1 2021, 43 billion revenue, 7 billion net income. Q2, 44 billion revenue, 1.57 billion income. Q3, 39.9 billion revenue, 5.92 billion net income. Now, they are making a lot of money. They have a lot of free cash flow, which sounds really good for the company, and they have paid over $120 billion worth of dividends, right? I'm pretty sure that's what it says. That's what I read up at one point. Now, a lot of people, they don't think that AT&T is a very good company. I think that it is a pretty good company, and I think around the $20, like if it goes down to $20, I personally think that's a good buying point. I am a little skeptical about buying this because I don't know how well they're going to do with the Discovery thing and their 5G, and like they're spending a lot of money on upgrading these systems. Now, when it is upgraded, I think it's definitely gonna be fast, and it's gonna be a good catalyst for the company or whatever. So on this article it says, 5G is likely going to be a game changer. AT&T has already made significant investments in the next generation mobile business. Furthermore, the company plans to reach 30 million customers by 2025. I thought they might have had more than that, but 30 million people is a lot of people, especially for the prices that you pay for this company every month to use. And then they charge people to get another gig. Like, you gotta pay another $10 You gotta pay $10 to get 1 GB of data. That's insane amount of money for 1 GB of data. 1 GB? Get the fuck out of here. But they're making bank whenever people do that. The last year has already been encouraging for the mobility business. AT&T added 3.2 million postpaid phone customers. Additionally, 1 million fiber subscribers were added. Nice. Another important point to note is that AT&T reported revenue of $30.2 billion from the communications segment in the fourth quarter from the same final period of 2021. The Ebitda margin of 35%. The Ebitda was $10.6 billion. The segment adjusted Ebitda. Ebitda is a good proxy for cash flows. The positive factor being that AT&T has been delivered robust cash flows from the communications division. This is important from two perspectives. Ebitda means earnings before interest, taxes, depreciation, and amortization. Is a measure of a company's overall financial performance and is used as an alternative to net income in some circumstances. So it's pretty much their net income, but a different version of it. A positive catalyst for media division is sustained growth in subscribers. HBO Max and HBO reported a global subscriber base of 60 million by the end of last year. The subscriber base had swelled to 73.8 million. Let's take a check at this chart, right? AT&T is the blue, so they've had about 30 million or 23 million. They'll have 30 million by 2025. And then Discovery has about 28 million subscribers, and Netflix has 386 million. So AT&T is buying Discovery, right? And then whenever they buy it, you'll get like 25% of Discovery whenever you get it. I don't know why Netflix is on there. They are not a part of AT&T. Warner Media beat Netflix in terms of new subscriber addition. There has been a steady growth in international subscribers, and the division had a big addressable market. For 2023, the merged entity had guided for revenue of $52 billion and an adjusted EBITDA of $14 billion. The merged division will also be targeting a free cash flow conversion rate 60%. Discovery also believes that the merged entity yo, my bad, man. I'm a new out loud reader, right? Entity will have more than 400 million subscribers in the coming years. The outlook for division is therefore positive in terms of growth and cash flow upside. So, Discovery believes that the merged entity will have more than 400 million subscribers. That's more than Netflix. I believe the worst is over for AT&T stock in terms of balance sheet concerns and business headwinds. The company has made sustained investments in the 5G segment, which will deliver results in the next few years. The media division spinoff is likely to create, even amidst intense competition in the live streaming business, a global addressable market will leave ample scope for growth. All right, so check it out. Like AT&T, no matter what they do, they're gonna make bank off of their cell phone or like their service providing. And now they're going to have Discovery, and they're going to build on top of that. So hopefully they do good with Discovery and have a bunch of subscribers, like Netflix and all that streaming stuff. I mean, streaming is the new thing. Now, what sucks is, like, Netflix is raising their prices, and, like, people started doing the streaming. They started doing the Netflix and stuff because it was cheaper than cable. Because people don't want to buy cable. But now you're going to have to get like 7 streaming services, which is going to be like $150 a month. And because now Netflix is charging like $20 a month if you want to be able to have like 4 people use your account in your house. If you have like, like, why can't I just watch it? Like, what if I want to watch Netflix upstairs and downstairs? I can't fucking do that. I have to pay for extra, like, TVs to use, like extra accounts, whatever. Like, let me like give whoever I want Netflix. And now, like, now it's like way more expensive than cable. At least you don't have to watch ads and stuff. And cable kind of sucks, right? The media division spinoff is likely to create value even. Okay. Overall, T stock has limited downside risk from current levels. The upside potential seems significant in the next few quarters. So yeah, like, I think that AT&T is going to keep succeeding as a company. It has been out for a long time, so, and they give so many dividends out that it's harder for them to grow as a company. Now, if they didn't give out dividends, they would like have so much money, man. Like, it would be insane. But it also keeps people invested in their stock by giving them dividends. So, it's more of a value company because like it's pretty much going to stay from like $20 to $30 a share. You haven't seen growth in the company in so long. Like, check it out. If you look at the last 5 years, it's literally been it's literally down from 5 years ago. Like, this stock was $42. If you look at the max, like, it used to be $54 a share in 1999. Like, that's insane. And it's literally just been a level stock. Like, they've been paying dividends for so long. How many dividends have AT&T paid out? Okay. Whatever, I don't even know why I searched that up. I guess, yeah, so I looked at this other one. So they have 12.8% forward free cash flow yield, which looks remarkably attractive in a world of low interest rates. Shares look a lot less attractive when we examine the enterprise value to Ebitda ratio. Relative to its 3-year average, the company remains overvalued at 7.63 compared to 7.47. TPE ratio. Let's see. The PE ratio. It's like a 6. Like, that's a very small PE ratio. I'm pretty sure that's a good thing. Where was I, man? So AT&T is expanding its media, wireless, and fiber networks, harvesting efficiency, paying down debt, and generating a large amount of free cash flow. Additionally, the upcoming split off could potentially unlock value for shareholders by highlighting AT&T's growth media business and streamline the focus on the core telecom businesses. Free cash flow generating is expected to remain strong for the foreseeable future, which gives management a path to continue deleveraging while still paying out an attractive dividend yield. However, the company's unappealing EV/EBITDA ratio and weak EBITDA growth profile combine to limit total return potential over the next several years. AT&T will still likely generate solid total returns when combining debt reduction and the dividend, but with interest rates poised to rise, it is unlikely that investors will see significant capital appreciation on an analyzed basis over the long term. And some people were talking shit on here. Let's see. Whew. This is looking at it at the price. Okay. So people were talking about T-Mobile. Investor sentiment is overly selling tea. People are not looking at the company earnings and prospects after all these divestitures and selling on pure emotion. This is not a bad price for this company. I've bought some and will add on further pullbacks if the market will give it to me. It's not a bad price, but it's not a compelling price either. What is in a rapidly rising interest rate environment? Something that trades at a steep discount to its recent historical valuation multiples and or is growing very rapidly and or something that benefits from rising interest rates. Man, like what the hell is this dude talking about? I don't care. Whatever. So I guess the shareholders kept voting for Solaric, incompetence the last 3 decades. So I guess, the management hasn't been very good for the company and they could do better. So whatever. Let's wrap it up. Jake Unfiltered. Have a good night. Thanks for watching. Oh, hey Maury. You gonna say bye? Okay, bye.